going on, guys? Bexio back, and today we had a brand new video. Jerome Powell just had his meeting about the future for interest rates, the tapering, what's going on with everything, and the markets loved it. It was exactly what was expected, and the markets were kind of pricing in this top peak fear of instant rate hikes and ending the tapering immediately. Or tapering fully immediately. So there was a lot of good news that came out of this. A lot of the market loved what was happening. But before we jump into that, if you are not subscribed, make sure to smash that sub button because we are on the road to 1,000 subscribers. Let's see what Jerome Powell was all about here. You can see this first article was just before he went on to talk, saying that the Fed will aggressively dial back its monthly bond buying and then sees 3 rate hikes next year. This is what the market has been wondering about. How is the rate hikes going to go? How many? Are they going to be immediate? And then this tapering, what's going on? That was the big questions. So we see right here saying the Fed will be buying $60 billion of bonds each month starting in January, half the level of the prior to the November taper and $30 billion less than it had been buying in December. So it's speeding up. It's basically doubling the taper, speeding it up to finish it in the Q&A by March, they said. So in 2 meetings, which would be March, where the taper would be done, they would be no longer buying assets or printing, having the money printer churning. Who knows how long they can do that for, and they'll stop at that point. And the Fed was tapering by $15 billion a month in November, doubled it, like we said, in December, and will accelerate the reduction further come 2022. That's going to be the March end. It's going to be done in March. And then what he said after that, we'll see. This was before the whole conference thing. Just watch the entire thing, all of his questions. But after that wraps up, in late winter, early spring, central bank expects to start raising interest rates, which were held steady at this week's meeting. So this was the one kind of surprise thing that came out of this was he said instead of waiting to raise interest rates a little bit, seeing how ending the taper ends, that it was most likely going to be that once the taper ends, almost immediately the rates would start to be increased. They're not going to be major rate hikes, like this says. This projections were released Wednesday, indicated that the Fed officials see as many as 3 rate hikes in 2022, 2 coming in 2023, and then 2 more in 2024. We'll take a look at that right here. There's a dot plot right here. So you can see this is the FOMC participants, the members, and where they stand, how they're thinking of all this. So you can see 2021, absolutely no one said increase rates or anything. And we see it much more mixed here. But in 2022, it's the majority in this 0.9% area. So they're going to go from 0 to 0.9% in 3 rates. So what are they going to have? They're going to have to go up by like 0.3 about every single time that there's a rate hike. So it'd be like from 0 to 2.5 and it become 0.25 to 0.3, or then 0.3 to 0.6, 0.6 to 0.9. All of these kind of ranges there, because right now the rate is 0 to 0.25%. So a big agreement here in 2022 with the majority around for this 0.9 interest rate. And we start to get a little bit more mixed these next couple years, but basically agreeing it's still going to be at least 1 to 2 rate hikes for this following year. And then there's still mixed again, but probably another 1 to 2 rate hikes going into 2024. And this is where we kind of level off and see where things actually go. And this is obviously longer run. So I don't know why it's not 2025, but it's a longer run. Stick around the majority around this 2.5. So that would be within, we'll say it's 2022. Within 3 years, the interest rate being around 2.5%. I don't know how long they can keep interest rates there if they're able to do it. And what happens with all the debt and things they have going on. There's a lot of different factors here, but it's going to be interesting to see how long they can hold these rates at these levels without something else coming up, and we'll definitely see it. But looking at their projections they have up here, basically you can see, talk about inflation. This PCE inflation is basically the same thing as CPI. They're very similar things. They're not the same thing, but pretty similar. And you can see their inflation, they've upped their projection for even the end of this year from 4.2 to 5.3. I still think they're undercutting it quite a bit, but 2022, they've upped their projection from 2.2 to 2.6. 2023, they've upped their projection again to 2.3. And then 2024, they have it, didn't change it at all, kept it at 2.1. But they basically, Jerome Powell admitted during this that inflation is going to run hot in 2022, and doesn't see it really slowing that much down. So it's going to be interesting to see how far off they are, if they're spot on. They're obviously completely didn't get it right last year. See how they do in 2022. Probably not going to get it right again. And this 2.6 that they've increased it to is probably undercutting it by quite a little bit. But we have to see how the taper and interest rate hikes affect the market, or like the supply chains, broader market, not like financial markets. But usually when the Fed does something or makes a policy change, increase rates, things, you see about an 18-month delay from when they put in a policy when it actually takes effect, and you start to see the effects on the economy, on the stock market, and probably we'll see it in Bitcoin and things like that as well. So we're gonna have to wait and see how it affects everything. But right now, the market pricing in, they're loving what they're all seeing, and we can see that right here. We take a look at the S&P 500 today. Massive green move up from 423, went up all the way to 432, basically taking away this dip we started to see. Another dip here, kind of going down. A lot of uncertainty, basically peak uncertainty of everything that could be thrown at the market, wondering what's happening with interest rates, the tapering, with end of the year profits locking in, all these different things. Very good time to buy stocks. You can see even on this left side here, lots of green, the market loving what Jerome Powell said, because it was to expectations. He said exactly what the market was expecting, but the market was pricing in being worse than expected. That's why we're seeing such a good move here. And even in Bitcoin, you see Bitcoin moving. It's over $49,000 right now. Broke out of this downward channel. So maybe, just maybe, we're starting to actually break out of this. You see, I mean, we've been pretty sideways for a long time now. We'll see if Bitcoin gets like over 50,000. It's been consolidating, and this is something that everyone expected it to start happening. But even Bitcoin reacted strongly to this news of not messing with the interest rates and things right away. And that was a big thing, kind of a sell the rumor, buy the news event for all markets here. And our guy Jerome Powell even had a crypto talk about, or talked about crypto during his little conference here. And you can see he's talking about crypto isn't a threat to financial stability.
I think that's a decent picture of where I would start.
How about the cryptocurrency issues? Anything that worries you there that's going on in there in terms of, it's obviously a lot of time in that sector. Is that on concern you at all?
I think the concerns there are not so much current financial stability concerns. I, of course, would support the views expressed in the President's Working Group report on stablecoins. Stablecoins can certainly be a useful, efficient, consumer-serving part of the financial system if they're properly regulated. And right now they aren't. And they have the potential to scale, particularly if they were to be associated with one of the very large tech networks that exist.
So he talks about stable coins, and honestly, probably have to agree to him to some point. Stable coins, not always as stable as they might sound because of the backings from them. So it's a weird kind of way to look at it. But I mean, we all know Tether is super shady and probably not backed one-to-one if there was a complete run on Tether and things like that. But so, concerns about that make sense to have, but saying crypto isn't a threat to their financial stability, basically clearing, cryptos like Bitcoin and Ethereum and stuff, like saying they're pretty good, they're not a threat, but stable coins they do see as a problem. So all in all, a pretty good meeting from Jerome Powell, money printer Powell. He basically came out, did exactly what people expected him to do, where the price in was that he was going to do worse and kind of say the taper's ending in a month, we're going to be done buying, and then rate hikes, but kind of saying still going down that path of slowly tapering, but speeding it up. And then the one bearish or bad part was increasing rates happening basically right after the taper ends. So look to March, where rates might be increased. That's going to do it for this video. As always, don't forget to smash that like button and subscribe. We are on the road to 1,000 subscribers. See you guys in my next video.